check. All right, good morning, everyone. This is your host, Shweta Mawal, and with immense pleasure, I welcome all of you present here to the second day of 21st World Congress of Accountants, November 2022, Mumbai, India. I can definitely see that there is a lot of energy in the audience because yesterday it was the first day, 18th of November 2022, where we all enjoyed the inauguration ceremony. And today we started with the yoga master, one of the most inspirational personality of India, Baba Ramdev ji. And I can definitely say that it was one of the most interesting session. But ladies and gentlemen, now it's the time to learn something in detail about the technicalities of accounting. And let me tell you all, it is also going to be one of the most interesting session because we all are going to get a glimpse into the future. We are going to understand in detail how accountants are adding value, what's changing in the opportunity available to the accountants, and why some arrangements might be in the short-term interest of accountants, but may not serve us well in the long term. Get to know from our eminent speaker on how the accountancy profession may evolve and how we can shape the emerging future environment. So, for this session, I would like to call on stage one of our most experienced and respectable speaker, CA Dr. V.G. Narayanan, Professor, Harvard Business School. So, everyone, please put your hands together for him. To discuss in short, Professor Narayanan currently chairs the elective curriculum of the MBA program at the Harvard Business School. He joined the HBS faculty in 1994 and has taught in several MBA, doctoral, and executive education programs. So let's hear from him.
Good morning, everyone. It's my honor and pleasure to be here. I'd like to thank ICAI and IFAC for the opportunity to present here. This is a very nostalgic moment for me. I'm a chartered accountant from India, and this is the 35th year after I passed my CA final exam in November 1987. What makes this extra special for me is I ran into my teacher, Sri R. Bhupati ji. He taught me income tax, and I took his blessings before this session. It's a very, very proud moment for me. I feel very humbled. This is the highlight of my professional career, and I miss my father who passed away 4 years ago, but I'm so happy I met someone of his generation who could bless me. So thank you all. It's my immense pleasure to talk to you today. I'm going to be talking to you about the future of accounting. And these are my speculations on what might happen, what the challenges are. But here is the agenda. Before I talk about the future, I'm going to go back into the past and understand how accounting must have started. What is the role for accounting in society? What would happen if we did not have accounting? And what is the value that accountants add to society? I feel that we have forgotten, or maybe we're taking for granted, how we add value to society. We need to reclaim that. We need to understand that, because to go to the future, we need to keep that very sharply in focus and say, this is how we add value, and everything else that's extraneous, we can change, but we need to hone in on how is it that we add value to society. So this is the agenda now, and I'll end with a set of prescriptions or a call for action. Okay, so let's go back to the very beginnings. How do we know, what is the earliest evidence that we see of accounting? We see this with the Babylonians, the Egyptians. there's a lot of, and the Mesopotamians, where there are inscriptions in rocks about grains that are delivered, or contracts that have been entered into, or taxes that have been collected. This is some of the earliest evidence that still survives. I'm sure there's other evidence in the form of palm leaves that were inscribed, but maybe they have been lost. But those that are inscribed in stone have survived thousands of years. Possibly accounting is as old as civilization itself. In India too, you go to the, Chanakya wrote Arthashastra between 375 BC and 300 BC. He had written Arthashastra, which is a treatise on governance and government accounting and taxation. Likewise, you go look at the temple walls in South India, you will see who gave the endowments, how much money was contributed. These are all the delegation, responsibilities, taxes, all this is etched in stone. So some of the earliest records of accounting are still around with us. But truly, the modern way of doing accounting, the double entry system of accounting, came into prominence in medieval Italy, in Venice in particular. So I've had the privilege at Harvard Business School's Baker Library of seeing one of the few surviving copies of Luca Pacioli's book, one of the first treatises on accounting. And that even prior to that, there was the Medici family's accounting records, and I've seen those as well. They are still in very, very good quality. The ledger books of the Medici families, all their expenses, their cash accounts, everything is handwritten in beautiful paper and survives till today. And one of the key reasons why I think accounting must have flourished and expanded in medieval Europe is that by then paper had been invented. It's kind of hard to keep track of all our transactions if everything has to be chiseled into stone. So the invention of paper strikes me as an important development in the progress of accounting. But equally important are the Hindu numerals. By 500 AD, we have Aryabhatta talking about not just the decimal system, but the positional value of these numerals. When you vary them from the units digits to the 10th digits to the 100th digit, the value changes. So by 500 AD, from the Hindu mathematicians had contributed both the concept of zero, but also the positional value of the numerals. Then by 800 AD, the Arab scholars are writing about the Hindu numerals. They added algebra and they added the fraction system to our knowledge. And so by the time we are in 13th century in medieval Venice, they're building on the progress that has been made by origin of paper in China, the development of the decimal system in India, and the addition of the fraction system and algebra in the Islamic world. All this contributes to the growth of accounting in Venice. Also, we see after that the growth of these joint stock companies. And I'm very sure that the development and the flourishing of joint stock companies in medieval Europe could not have happened but for accounting. Why is that? The first thing to realize is that accounting allows for the separation of ownership and management. You can have a bunch of people sitting on land who are contributing capital, and that company can then buy ships and engage in maritime trade, and the captain of the ship comes back and renders accounts to the owners of these voyages. That must be how accounting led to the growth of joint stock companies and the separation of ownership and management. This allowed the attraction of risk appetite, risk capital to these enterprises. Accounting also allowed decentralization. By 1775, the English East India Company was lording over millions of people in India, right? But can you imagine that they had only 159 employees in their headquarters in London? All it took was 159 employees for them to have a dominating presence around the world. That was not possible without the accounting reports that would have been used to decentralize and delegate. So accounting could be a force for good, but it can also be a force for control. Likewise, accounting is used for evaluating the performance of managers so that we decide whether to promote them, whether to retain them, whether to give or to hire someone else to replace them. And accounting is also used for valuation. When someone sells shares in one of these joint stock companies to another person, what is the price at which they're going to sell it? Clearly, it's going to be based on accounting reports. So these were the early uses of accounting information to decentralize, separate ownership from management, evaluate performance for valuation. But keep in mind, when you start using accounting information for valuation, when you start using accounting information for performance evaluation, what gets measured gets managed. And there are good ways in which things can be managed. You can improve efficiency, you can perform better at a higher level, and you will attract the best talent, the most hardworking talent to the best companies. You attract capital to the most entrepreneurial organizations. But you also have people managing numbers by cooking the books. So right when accounting being started for use for performance evaluation, auditing emerged at the same time to check the veracity of these numbers. That is human nature. Okay, these are the origins of accounting. But there is a subtle piece to this that is more important that we haven't talked about. This is called about the information asymmetry. Information asymmetry can destroy markets. It can destroy the exchange of products and services. And if you provide information symmetry, you can unleash the power of markets. You can unleash the power of prosperity. So let me give you this as an example. The George Akerlof, he's a Nobel laureate. He wrote this paper called The Market for Lemons in 1970. And it's one of the foundational papers in information economics. I'll try to give you a numerical example to give the insight. Lemons are like used cars. And imagine a used car that you own, that you want to sell. And you think that the car is worth somewhere between 500,000 rupees and 900,000 rupees. And the buyer of this used car is also aware that it's worth somewhere between 500,000 and 900,000 rupees. But neither party knows exactly what it's worth. They just know that it's worth between 500 and 900,000, and it's uniformly distributed in this range. Then the buyer might say, okay, I'll offer 700,000, halfway between 500,000 and 900,000. And the seller says, that's a fair price, let's shake hands, and there's transaction. But let me change one slight assumption, which is a reasonable assumption to change. The seller knows more about the worth of their car than the buyer of the car. What will happen is that, and this is the genius of Akerlof when he proved this mathematically, he showed that if the buyer knows the price of the car, if the seller knows the price of the car, what it's truly worth, but the buyer does not know, all trade will collapse. Because if the buyer now says, let me offer 700,000 rupees, all sellers whose cars are worth more than 700,000 will say, I'm not going to sell. So anticipating this, the buyer will no longer offer 700,000, they might only offer 600,000. Knowing this, sellers with cars worth more than 600,000 will refuse to sell. So the buyer will now say, let me adjust it down to 550,000. Knowing this, sellers with car worth more than 550,000 will refuse to sell. Working backwards, the only car that can be sold is the absolute bottom, which is called the lemon. The worst car will be the only car that can be sold. The idea is not about selling used cars. This is true in any setting, including in capital markets. When one party is privately informed and another party, either the buyer or the seller is privately informed and the counterparty is not, doesn't have the same information, trade will collapse. Exchange of products, goods, services, or exchange of securities will not happen. And that destroys value in society. So let me give you a counterexample to show you the power of information symmetry. We are going to look at this company, Alibaba. Alibaba entered the e-commerce space in 1999, about 23 years ago in China. They were a late entrant. eBay, which had already tasted success in USA and in Western Europe, had already entered the Chinese market. They had better technology and they had deeper pockets. They were already very profitable. They had access to venture capitalists. So they had a big lead over Alibaba. But what Alibaba did was it said, China is different. The buyers and sellers in China do not know each other. They don't trust each other. The buyers were concerned that these sellers would ship shoddy products to them through the e-commerce channels. And the sellers were concerned that the buyers will actually not pay for the product. The use of credit cards was not that common 25 years ago in China. So because of this lack of trust between buyers and sellers, eBay was not getting much traction. Amazon, which came after that, was also not getting much traction. This is where Alibaba's genius came in. They said, we are going to solve this information asymmetry problem. We are going to take the money from the buyer and hold it in escrow. And we will give 7 days for the buyers to examine the product. If they're going to keep the product, we'll transfer the money from the escrow to the seller. If they're going to return the product, they'll get their money back. So that way, both parties are assured that they will not going to be cheated by the other counterparty. Then they said, we are going to allow the sellers and buyers to privately communicate on our platform, exchange videos, exchange pictures, exchange demonstrations. All of a sudden, they create ratings of buyers and sellers of each other. All this led to a higher level of trust in the e-commerce space, and the result was amazing. Not only did Alibaba overtake all its competitors, it became the largest e-commerce platform in the world and made more transaction volume and more profits than the next several e-commerce players all over the world combined. So you can add Amazon, you can add eBay, you can add all their profits, all their revenues. Alibaba is significantly bigger because they were able to solve this information asymmetry problem. Buyers and sellers are now able to trust because they have the same information. Now this applies in capital markets too, and this is where the connection to accountants comes in. In capital markets, there is exchange between the investors and the firms in which they invest, where the entrepreneurs are starting. In exchange for their investment, they get periodic information and they get their returns in the form of dividends. But all this will work only if there is trust between capital providers and the entrepreneurs. And that trust depends on the integrity of the information that's provided to them. Otherwise, you will have private information. The entrepreneurs will know more than the capital markets. So what will that mean? When that happens, the bid-ask spreads will increase and the cost of capital for these companies would go up. If you want to reduce the cost of capital for these companies, you have to reduce the information asymmetry. Likewise, if one pocket of shareholders are better informed than the different pocket of shareholders, trade between these two parties cannot happen. The bid-ask spreads would go up and the stocks will become illiquid. So killing private information is the key to unlocking prosperity in capital markets. And the way we do it is through periodic accounting reports that reduce the information asymmetry between the promoters and the stock market, and also between different parties in the stock market. So same ideas that we saw in Alibaba is true in capital markets as well. So what are the implications for accounting? Accounting reduces information asymmetry. It reduces cost of capital. It can unleash prosperity if it can truly reduce information asymmetry. We are in the trust business. People have to trust us, because when we come and say these are the numbers, and if people want to, unless they believe us, the information asymmetry will not come down. Okay? So we have to understand that our integrity is the most important asset that we have. Lastly, users of financial statements care equally about the relevance and the reliability of our financial statements. It's not one or the other. If all we cared about was reliability, then we can say all assets should have a useful life or depreciation of 15 years. Then every company will use 15 years. There'll be no manipulation of the books. You'll have very reliable numbers, but it will be completely useless because there will be no relevance to the information, where the private information of each company and how it's using its assets is not reflected in its books. So we have to have both relevance and reliability. For reliable information, we need our profession to invest in integrity and objectivity and independence of both the preparers and the auditors. Likewise, for numbers to be relevant, we need to invest in the competence and training and professional judgment of our profession, of our professionals, of our fellow accountants. These are the key attributes, the relevance and reliability of information, that's going to be important to reducing this information asymmetry. So I want you to imagine this opportunity that I'm going to describe for you. So I've been talking lots about financial statements, but I think the large opportunity is actually in the ESG space. What are the biggest challenges confronting humankind today? We are destroying our planet. There's not going to be a planet left for our children and grandchildren if we continue to pollute the planet this way. So renewable energy has to be important, but carbon emissions and pollution everywhere has to be a focus. Unfortunately, there is a lot of greenwashing. Lots of companies put out reports, but how do we know? How do we trust it? We don't have. So in the world of ESG, we are today where probably medieval Europe was in the world of financial accounting. We need standards, we need to train our auditors, we need to train the preparers, but that's the only way forward because we need very relevant and reliable ESG reports for us to literally save the planet. And this is not hyperbole, this is a moral imperative for us. But there's considerable promise in technology. The time that we spend in vouching transactions to make sure that the counterparty and the transaction amounts, the terms are all there are correct, that's more easily done with distributed ledgers. Those technology is going to make the verification of transactions a lot easier. I can even imagine a world where financial statements of companies are continuously updated on their websites. You want the balance sheet of a company, go to their website, by the second, by the millisecond, as and when transactions happen, the balance sheets, the income statement for the period and cash flow statement is all changing. That's possible today. We have the technology. It can be done. It can be even better than that. If the user says, I don't like their accounting policy of this company, I want to use a different accounting policy, all they should be able to do is change a few settings on their computer and the financial statements of the company that they're looking at completely gets recast. If the company had been using LIFO in the US, if the company has been using LIFO in the US and they want to see FIFO financial statements, this can be done. So when you do all this, we can start attracting capital and labor to the preferred sectors. The youngsters today are shunning companies because they want to see businesses focusing on the environment. And capital wants to flow into organizations that care about the future of our society, the stakeholders, and governance. All this is possible if we can reimagine the role of accountants. So we're losing the plot. We're doing lots of things. We are focusing on campaigning for strict rules that take away our professional judgment. We are protesting any rules that talk about the importance of auditor independence. We are cutting our costs and liabilities rather than standing behind our certifications. And we are not attracting the best and brightest to our profession. Ask yourself, compared to a generation ago, if the best and brightest in our society are coming to our profession, or are we losing them to other professions? So the call for action is this, okay? We should aspire to be a force for the good because the future of our planet depends on businesses broadly, and for businesses to do the right thing, we need accountants to be certifying their ESG reports. So we can be a force for the good. We need to aspire for that. But the key here is our unimpeachable integrity and independence. So force for good, our integrity, we need to attract the best and brightest. And the best and the brightest will come into our profession if they know, if they are inspired by the fact that we can change the world and make it a better place. And everything else we need to be flexible about, and we have to embrace change. There is a core fundamental problem in the nature of the auditing relationship between the client and the firm. The fundamental problem is that the client pays for the auditor, and then the auditor has to render an opinion on the client's financial statements. Imagine if this happened in the judicial context where one party pays for the judge and they can shop around for which forum in which they can pick the judge. We will never trust, even if all the judges are honest, it will not give us the perception of honesty. Why do we put up with this? Anywhere in the world, I'm not talking about any part of the world, all over the world, we put up with this system where the client pays the auditor and yet the auditor is supposed to exercise professional judgment. It's actually a miracle that the financial statements are this good because the fundamental basis on which the auditor-auditor relationship has been set up is not correct. But there are lots of natural experiments happening in the world. In India, we see mandatory audit firm rotation. In other parts of the world, they have audit partner rotation. When I was training to be an article clerk in Chennai, we used to do audits for the Audit Bureau of Circulation. And ever so often, another audit firm would come and check our calculations. Boy, did we take immense pride in our audit reports, because we did not want another fellow professional to find mistakes in the work we had done. Maybe we can extend the same arrangement where some fraction of audits are re-examined either by regulators or by competing audit firms. There are a lot of potential ways in which we can fix this basic conflict of interest. But we need to embrace, we need to be flexible about all those changes. Maybe auditors would be hired by the stock exchanges. Maybe they would be hired directly by the institutional investors. We should be open to all arrangements that improve the integrity and actual and perceived independence of the auditors. If we do that, the future, we have a very, very bright future. All we have to do is focus on our independence, our integrity, and making ourselves a force for good and attracting the best and brightest. Thank you very much for this opportunity to speak to you. Take care.
Thank you so much, sir. We really thank you for giving your precious time and making us learn valuable things about the future of accounting. Now, to present the memento, I would like to call on stage CA Prakash Sharma, CCM, ICAI. Can we please call upon Mr. Prakash Sharma? Okay, everyone, put your hands together for CA Dr. VG Narayanan ji, Professor Harvard Business School. Thank you so much, sir. Thank you so much. Ladies and gentlemen, there is no break because I would like to inform you all that Adani ji is right here. So we are starting up with the next session. So everyone, cheer up for Adani ji, and I would like to call upon my colleague, Mr. Amit Arora.
Nice to listen to you. Excellent, Manu. Excellent.
Thank you so much.
Thank you very much. So good afternoon once again, and welcome to day 2 of the World Congress of Accountants. And now we are at a juncture of a keynote address. This is on the topic, India's path to become an economic superpower. As we celebrate Azadi Ka Amrit Mahotsav to mark 75 years of India's independence, the nation stands at the threshold of infinite opportunities and accelerated growth. By nominal GDP, the economy of India is the 5th largest, behind only the United States, China, Japan, and Germany. India is one of the fastest growing economies of the world. Our current GDP is nearly $3.5 trillion, and the aspiration is to double it within a decade. So what's the potential? How can the nation achieve these aspirations is what we will hear from our distinguished keynote speaker. I'd like to invite on stage now someone who is excited to be a part of India's growth story, someone who has made immense contribution to India's economy. Ladies and gentlemen, please put your hands together to welcome Mr. Gautam Adani. Mr. Gautam Adani, founder and chairman, Adani Group, and as the tagline says, growth with goodness. Thank you very much, sir, for your gracious presence in the World Congress of Accountants. We have with us CA Dr. Debashish Mitra, President ICI, and CA Aniket Talati, Vice President ICI. First and foremost, I'd like to request CA Dr. Debashish Mitra, President, Institute of Chartered Accountants of India, to please share his welcome address.
Okay, all right. Good afternoon to all of you. You can see from the smile on my face that how satisfied I am to have the great Mr. Gautam Adani with us. And sitting next to him, the young Vice President of the Institute of Chartered Accountants of India, Aniket Talati. About 1 month back, let me just, in 2 minutes, tell you my experience with him. About a month back, I was invited by him to be in Ahmedabad. And there I went and met him. And the first thing that the first impression that I had of him was, here comes a man who is a bit unassuming, but extremely determined and sincere. That's the impression that I had of him. And then he said, chartered accountants, you all guys only want to be CFOs. Why don't you aspire to be CEOs? And that is what he said. Fantastic. Then he said, by that time, he had accepted our invitation to be here. Then we said that, sir, we want one small favor. He said, what do you want? I said, sir, you control so many airports. If you can have billboards of the World Congress in the airports that you have. And those of us who have seen the billboards in the Mumbai airport and taken a lot of pictures there of the World Congress, let me tell you, it was done free of cost by the Adani Group. His love for the institute in this short period of time I have seen is immense. Today, just before he came about 10 minutes back, I was sitting with him, hearing him speak with the others, and one of the statements still rings in my ears. He says, in my group, full transparency, no surprises. That is what Mr. Adani is all about. Sir, from the core of our heart, on behalf of the Institute of Chartered Accountants of India, we welcome you in our midst. And thank you very much, sir, for the kind presence. Thank you, sir.
Thank you very much, CA Dr. Debashish Mitra, for your welcome address. And of course, now the moment that we all have been waiting for, let me invite Mr. Gautam Adani to deliver his keynote address.
President of the Institute of Chartered Accountants of India, Dr. Debashish Mitra, Vice President, Mr. Aniket Talati, outgoing President of the International Federation of Accountants, Mr. Alan Johnson, incoming President, Ms. Asma Resmuki, members of the ICAI and IFSC, and my dear friends. I am deeply honored to have been invited to speak at the 21st World Congress of Accountants. The choice of India for the first time in the 118-year history of this event is a recognition of India's inevitable journey towards becoming an economic superpower. It reflects the rising tide of confidence of 1.4 billion Indians. It reflects the wind in the sails of the world's fastest growing economy. there could be no better manifestations of the scale of India's thinking than this magnificent Geo Convention Center showcasing this event. We all recognize that we are gathered here at a time of uncertainty. The intersections of the COVID pandemic, the war between Russia and Ukraine, the challenge posed by changing climate, the surging energy prices, and unprecedented accelerations in inflation have created a crisis for a global leadership. The contours of our international relations have fundamentally changed, and the aftertaste of globalizations is not as flat as had been predicted. The fact is that several of our assumptions have been challenged, that the EU would stay together, that Russia would be forced to accept a reduced international role, that China should adopt Western democratic principles, that secular principles are universal in nature, and that a pandemic breakout would mean developed countries stepping in to help the developing world. Unfortunately, every single one of these beliefs has faltered. This multi-level crisis has shattered the myth of unipolar or a bipolar world of superpowers that could step in and stabilize global environments. Let us take an example. Yesterday in Egypt, the curtains came down on COP27. In 1992, when the world had come together to sign the international treaty on a climate change, the principle was stated as to enable economic development to proceed in a sustainable manner. However, the contributions expected from the developed nations have failed to come about, and the struggle to balance equitable growth with a limiting global warming to 1.5 degrees Celsius has fallen far short of expectations. This is just one example of stepping into a world where every nation makes its own decisions, and it will be increasingly hard to manage by economic might and command and control structures. Therefore, in my view, in this emerging multipolar world, superpowers will need to be those that take a responsibility to step in and help others in a crisis and not bully other nations into submissions. It will be those that keep humanity as their foremost operating principles. A superpower must also be a thriving democracy and yet believe that there is no one uniform style of democracy. It must be a nation willing to share its technology to enable social development, to address the universal challenges in education, healthcare, and a skill development. The style of capitalism that drives growth for the sake of growth and ignores the social fabric of our society is rightfully facing its greatest pushback ever. It is in such a multipolar world that the foundation of India's increasing economic might, coupled with its culture and beliefs, become relevant as it takes its journey to becoming an economic superpower. One that combines monetary growth with a vast social growth, all within the bounds of democratic society. It is in this context that I express my views. It is well documented that at the time of India's independence in 1947, the opinion was that Indian democracy would not survive. Not only did we survive, but India is now regarded as a role model for a peaceful transfer of power from one government to the next. Also, it is after more than 2 decades of our relatively short-term governments and coalitions that we have a government with a majority of its own. As expected, this has given our country the ability to initiate several structural reforms in the political and administrative systems and deliver public services, balancing a long-term view with a rapid executions. Let us take a look at some other enabling factors. Our democracy is now 75 years old. This is about the average lifespan of an Indian today. Within this period, India has seen a remarkable accelerations. It took us 58 years to get to our first $1 trillion of GDP, 12 years to get the next trillion, and just 5 years for the third trillion. Given the pace at which the government has been executing a vast multitude of a simultaneous social and economic reforms, I anticipate that within the next decade, India will start adding $1 trillion to its GDP every 12 to 18 months. And thereby putting us well on track to be a $30 trillion economy by 2050. And with our stock market capitalizations, that will be possibly exceed $45 trillion. To illustrate the relevance of these numbers, the United States today is a $23 trillion economy with a stock market capitalizations ranging from $45 to $50 trillion. While these absolute growth numbers for India will be greater than for any other nation between today and 2050, a nominal dollar-based GDP narrative still does not paint the real potential of India. The significance of the scale of any GDP expansion must be normalized in terms of our nation's purchasing power parity. In this context of PPP, India's share of our global GDP will be north of 20% by the year 2050. I would urge you to reflect on this incredible possibility as you think about India. A country crushed and drained by its colonial rulers today stand resilient on the cusp of extraordinary growth and is the only major country on a path to emerge as a high-income nation without compromising its democracy and diversity. Well before 2030, we will be the world's third largest economy, and thereafter, the world's second largest economy by 2050. India's success story of combining economic growth and democracy has no parallel. Now let me now talk about India I see in 2050 and outline a set of interconnected factors that establishes India's path forward. All of these factors will combine to make the next 3 decades the most defining period for the impact India will have on the world. The first dimension is our nation's demographic dividend, which will drive consumptions and accelerate the growth of a tax-paying society. India's median age will be just 38 years even in 2050. Over this period, till 2050, India's populations will grow by 15% to 1.6 billion, but the per capita income will accelerate by over 700% to approximate $16,000. The growth of this consuming middle class will drive an unprecedented surge in demand, which in turn will drive a surge in a private and a government expenditures, as well as attracts the highest level of foreign direct investment. In this ongoing year, India is expected to record a 15% increase and all-time high of over $100 billion of FDI. Such scale of investment lays the foundations for a significant job expansions. In fact, India's FDI inflows have increased over 20-fold since the year 2000, and I would expect it to touch $1 trillion by 2050. Nothing beats internal demand within a large economy to attract FDI, and there could be no better sign of the increasing global confidence in India. The second dimension is the pace of entrepreneurships that India is witnessing. Digitalization has accelerated this velocity, and a digitally enabled India is transforming every aspect of how India operates, lives, and consumes. In this context, the current world, entrepreneurship and digitalization are strongly linked and combined to create a dynamic, innovative environment. A digitalized India will also transform healthcare, education, and skill development and create a more equitable society. India's pace and adoption of digital technologies will create a massive new and innovative market spaces. I fundamentally believe that the next 3 decades will propel India to the forefront of entrepreneurships. This journey is already well on its way. Allow me to explain. In 2021, the pace of unicorn creation in India has been the fastest in the world. This will continue, and for every unicorn that rises, we will see the birth of dozens of micro unicorns. In 2021, India added a unicorn every 9 days. It executed the largest number of real-time financial transactions globally, a staggering of 48 billion. This was 6 times greater than the US, Canada, France, and Germany combined. All of this has laid a base for the fourth industrial revolutions, where humans and machines are all interconnected, to be then followed by the AI and Web 3.0 revolutions, where the physical and digital world start fusing. I expect that just like India's internal demand leading to a surge in FDI, the number of startups being created will lead to a surge in venture capital investments. VC funding in India first crossed $1 billion in 2015. This year, VC funding will exceed $50 billion, and this is just 50x acceleration in just 8 years. India stands as the foremost example of how a smartphone and an inexpensive data powered by aspirations can create the jobs and transform a nation. The third dimension that will prove to be a powerful transformation lever for India is in the space of our energy transitions. Energy poverty is today developing world's greatest challenge, and this gap will need to be mostly filled with a renewable energy. While India currently ranks third in the renewable energy attractive index and is the world's third largest energy consuming country, there is little doubt that India's energy transitions will be unparalleled as it races to meet its energy needs. By 2050, India will need 400% more units of energy than it currently consumes. While this may seem challenging, the technology advancement that we are seeing is expected to make this possible. Given the dramatic and continued drop in the cost of renewable energy, especially solar power, the marginal cost of green power is headed to zero. The ability of this zero-cost electron to economically split a water molecule and create 100% green hydrogen in the future is now certain. The combination of a solar and wind power coupled with the green hydrogen opens up unprecedented possibility for India. I would go as far as to state that the revolution in alternative energy technologies opens up the possibility that by 2050, India can become a net green energy exporter. This will also enable decentralized power generations required to accelerate the micro-sizing of any process. It will enable entrepreneurship opportunities across micro-manufacturing, micro-agriculture, micro-banking, micro-healthcare, micro-education, everything that India's rural populations needs for its development. Cooling the planet down will be one of the most profitable business and the largest of job creator over the next several decades. I am in no doubt that India will lead the global energy transitions. This is why the Adani Group is making a massive investment in driving not just India's, but the global energy transitions. Over the next decade, we will invest over $70 billion in this space and build the world's most integrated renewable energy value chain. There can be no greater sign of my confidence in the India's growth story. Along with my optimisms, I do recognize that lot of still needs to be done as the economy grows. What we cannot afford to do is fall into the classic two-speed nation trap where the top half of the society grows prosperous and the bottom half remains poor. Therefore, our wealth creations must focus on both quantitative factors related to per capita GDP and qualitative factors that include education, skills, and healthcare. As both domestic companies and multinationals take advantage of India's market size, we will need stronger mandates wherein corporates are compelled to rise to the challenge of enabling a social structure that recognizes the core of our culture and is aligned with our national needs. India cannot be just seen as a land for making and taking profits out of its geographic boundaries. This is why I said at the start that the superpowers in the multipolar world must recognize there is no one size of democracy that fits for all, and the aftertaste of globalization is not as flat as was predicted. We are at the World Accounting Congress, and so let me now briefly touch upon my views about the future of these professions. I fully buy into the view that India will continue its journey to become the largest hub for offshore accounting services and further increases its share of the global knowledge process outsourcing market. Advancement in a cloud-based artificial intelligence, distributed computing, and cyber technologies make this far easier. I foresee some of the domestic companies taking full advantage of this massive possibility given the inherent strength of our cost, and efficiency equations. However, in my view, given the understanding of financial intelligence, budgets, and quantitative and technical acumen accountants bring to the table, I believe that some of the smartest CEOs and service heads should also come from the accounting professions. This is what I would ask accounting professionals to aspire and inspire the younger generation of accountants that follows you. My dear friends, let me close by saying that if there ever were a time to be Indian, be in India, and associate with India, it is now. The foundation to build a new resilient India has already been laid. We will be an India that taps into our own markets to help it become self-reliant. An India with a democratic systems that is based on dignity and equality. An India that has the courage to aspire. An India that is responsible power and are strong at its border. The policies that have been put in place have allowed our nation to make a tremendous progress over the last decade and put us firmly on the path to become an Atmanirbhar or self-reliant India, a self-reliant society that is 100% literate, 100% healthy, and 100% vocationally trained, and most importantly, a self-reliant India that has forever eliminated poverty, all achieved well before 2050. This is what being a superpower should be all about. I hope you share my bullishness about India. Thank you and Jai Hind.
A standing ovation for him, ladies and gentlemen, a standing ovation for him. Thank you.
Louder, please. If there ever was a time to be Indian, to be in India, to be associated with India, it is now. Thank you, Gautam Bhai. What a phenomenal address. What a phenomenal address. I think we all have goosebumps with what Gautam Bhai has just shared with us. I was thinking, writing my vote of thanks, of the right adjective for Gautam Bhai. Visionary, first generation entrepreneur, bullish in his approach. But I think the one word which defines him after hearing him today is a perennial optimist. Thank you, Gautam Bhai, for the wonderful thoughts that you've given us. India as an economic superpower, $30 trillion economy by 2050. Market cap of $45 trillion, contributing 20% of the world's GDP, the second largest economy, and doing all of that in the most sustainable manner through solar and hydrogen energy. Sir, fantastic words by you and a huge message for the world. We cannot be in a unipolar or a bipolar world. And I think even for us as an accounting federation, and of course under the aegis and umbrella of IFAC, a unique message that we can take up for the purpose of our fraternity and accountants, for our standard setting, that we cannot think only from global perspective, but the standard setting must be truly with a global perspective. Sir, let me thank you personally for immediately acceding to our request when Honorable President Sir and myself came to Ahmedabad and personally requested to you. You just said one thing. I came in 2007 for the international conference in Ahmedabad. I will definitely come for 2022. I think on behalf of the membership, I will only request Gautam Bhai, we don't wait another 15 years to hear you. We can get the opportunity to have your address much sooner. And finally, sir, your message, especially to me in this age, and of course to all the young members, the average age of this hall also is in its 30s. And when you said that 38 is going to be the average age by 2050, and you mentioned the fact when we were with you, and you looked at your group CFO and said, why do you only make CFOs as chartered accountants? Nobody understands business better than chartered accountants. I want a CEO at the age of 38 to be a chartered accountant. Sir, your confidence in our profession and your optimism is inspiring. Thank you very much once again, sir, for sparing your valuable time and addressing this august audience. Thank you very much.
So we like to also request the respected Central Council members to join us on the stage, as we would like to present a token of gratitude, this memento, to Mr. Gautam Adani, founder and chairman, Adani Group. So this is one group photograph for posterity, a great memory of the 21st edition of the World Congress of Accountants. And as Mr. Adani said, that the world could reflect on the possibilities that this great nation has to offer. Thank you very much, Mr. Adani, for sharing India's success story of combining socio-economic growth and democracy. It truly is unparalleled. I think your insights into what future superpowers will be like and what will be their responsibility in a multipolar world was very profound, and thank you very much for sharing this impactful keynote address, sir. Thank you. Thanks once again to our distinguished keynote speaker. And as Mr. Gautam Adani makes his way out of the Jasmine Hall here at the Geo World Convention Center, thank you everyone for being in attendance. It's time for break, so enjoy the lunch and then please be back by about 1:50 in this very hall so that we could start with the next session. Thank you very much.